Hey everyone, we are here for our next session. It is on the future of payments and central bank digital currencies. And we have John here who will be giving the talk. John, can you introduce yourself? And for the audience, can you confirm that you can hear him?
Yep, thank you. I could hear you. Thanks, Shin. Hi, everyone. Good morning, good evening, good afternoon, wherever you are. And thanks for spending time today to sort of attend this session. There's a lot going on. There's a lot of interest on future of payments and central bank digital currency these days. Before we start, just want to introduce myself. My name is John Ho. I am a co-chair of the Financial Services Special Interest Group of the Enterprise Ethereum Alliance, EEA. I'm also on a daily basis, I work as a banker on the sort of legal department of the Standard Chartered Bank, which is a international financial institution headquartered in the UK in London. So without further ado, I wanted to sort of touch base in the next 30 minutes on an overview of the future of payments and a central bank digital currencies. So let me start by looking at the overlay of what we want to cover today. So the agenda I want to cover is the impact of COVID-19 pandemic to banking and the future of payments. The next one is on technology shift and relevance to blockchain. And the topic today is obviously the future of payment and central bank currency. So we're going to zero into that. So just give you the perspective of what COVID has done to the world. I've prepared a slide that provides a snapshot in terms of key numbers, key impact to COVID. So if you look at the slides that I will show, the next slide, in terms of COVID. So setting the perspective, where are we today? Obviously, this was taken a few days ago. Half the world, as we know, is on lockdown. And from the report by the IMF just a couple of days ago, worldwide, the governments around the world have spent 12 trillion US dollars to rescue economies because you have workers that are unable to go to work, they've been furloughed and being disrupted. Businesses are being disrupted. And that has resulted in 23 trillion worth of US dollars in global lost output. And on the personal front, 1.9 million people have lost their lives, with 38.4 million cases still today. And these cases were all going to rise. It's a snapshot. It was taken a couple of days ago. And that gives a very pretty grim picture. But what does it mean towards the adoption of digitization? What does it mean towards those who are involved in the future of payment? Has accelerated that trend. If you look at the slides, I would like to show to you the next slide in terms of the technology shift. So COVID-19 have accelerated the transition to a digital future, not just work, commerce, but also social activity. In countries around the world, regulators around the world are advocating for consumers to use digital payments because of the social distancing measures, the lockdown, and the inability to carry on your normal activities that require face-to-face and require human contact. So increasingly, the last 8 to 9 months, with the data that we've seen, there's a huge adoption of mobile and digital banking services during this COVID-19 pandemic. And the trend is here to stay. And if you look at the slide that I'm going to show to you, the next one, you could see that these are the kind of key changes that would happen. First, there's an increased demand for digital and electronic payments. And obviously, there is also a declining use of cash. So a number of central banks, for example, have conducted a few measures to allay the concerns of risk of transmission of people handling physical banknotes or coins by either quarantining the banknotes or even going to the extent of replacing the used banknotes or coins with new banknotes or coins. Obviously, this is a very expensive proposition. So a lot of central banks now are seriously thinking, with the declining trend in the use of cash, how do we enable payments to be made post-COVID? And obviously, we've talked about the future of payments, the innovation in payments, stable coins, central bank digital currencies. but not a hot topic for today, but we're also seeing increased interest in public authorities, exchange and market participants looking at tokenization of financial assets. And that's something that is key. But I just want to go back and focus on the future of payment and innovation in payment, which is a topic that we have today. So moving on to the zeroing in the future of payment, I just want to sort of provide a sort of an overview of what we see, at least in the banking world, and the trends that we see in payments. And I'd like to show you the slide that provides an overview of the future of payments. If you can turn on to the next slide, please. Yes. So earlier we talked about digital payments, inaccessibility to ATM machines, fear of contagion, and also to bolster trust in cash, and central banks are actively communicating and urging people to move away from cash to digital payments. So just by way of example, in Europe, when you make payments, especially using e-money, typically there is a transaction limit. So during this period, they've encouraged the sort of financial service provider to actually increase the transaction limit to allow people to make transactions online or on a digital platform without being restricted to the usual restrictions that are currently in place. So what we see is that with the collective efforts of public authorities in central banks, this is paving the way for private use of different modes of digital payments, and also the increased use of central bank digital currencies, leveraging somewhat on blockchain, distributed ledger technology, and other forms of technology, right? For example, AI, machine learning, and Internet of Things. So looking on to the next slide, we wanted to show you sort of from a US perspective, especially, what the future of payments will look like. As some of you might be aware, the Federal Reserve Board of the United States have launched a project called FedNow service. At the moment that service is not in operation yet, it is estimated to be in release in 2023, or for that matter, 2024, timeline yet to be determined, but they are basically doing a trial and looking at how do we enable FedNow service. So FedNow service will transform the payment service as we know it in the United States. What does it mean? It will enable faster, cheaper, almost instantaneous payments, not just on 5 days a week, but 24/7, i.e. it will operate 365 days, 24 hours a day. That would transform the future of payment in the United States. As we note right now, if you make a payment in the weekend, especially you want to do it on a cross-border basis, one, you can't do it because banking systems are shut. Two, for high value transfer, that's not possible. And I think they realize that they have to play catch up, because if you look at what happened in Europe with PSD2, they have actually enabled a growth of challenger banks, like the likes of TransferWise, Revolut. They've enabled consumers to have options in addition to the traditional financial institution to offer payment services at a faster, cheaper, and in some instances, a variety of services wrapped around the service provider. So I think there is a realization that in the US, given it's the largest economy around the world, we need to fix the payments, current payment system, because by doing that would open up more payment services that would also allow for healthy and fair competition. In addition, the benefits to consumers are kind of immense. First of all, is we talk about financial inclusion. As we know, with COVID, it has transpired that quite a number of Americans do not have access to a bank account, given the fact that they don't have credit history. It's not possible for them to do that, and some of them live in areas that are far from banking services. I think to enable FedNow service, that will allow for a more inclusive society. That's clearly the intent. Now, in addition to the FedNow service or projects that the Fed is doing, what we also see, if it's use a crystal ball to see what will you see in the next couple of years, where do you see the trend? Obviously, as you note, some people are investing in virtual currency as an option. But the difference between a virtual currency and a central bank digital currency is the virtual currency is not a legal tender. It could be a means of exchange or a means of holding. But certainly in the eyes of the Fed and the US government, the central bank digital currency in its name connotes that it is a central bank money, but only issued in a digital form. So as we speak right now, there are a number of projects around the world that looks at central bank digital currency, which we'll touch on in detail. But at least on this slide, I just wanted to show the difference in terms of what potentially the future of payment look like. In addition to what we are known as the current US payment system, you have the FedNow service. We potentially in the future will be spot for choice. Will have CBDCs, as I mentioned. And we also have stable coins which already exist in the US. As you look at USDC, Circle, Paxos, Tether. So these are different forms of stable coins that we see. But increasingly, there's a lot of interest in this area. The OCC just recently have issued an interpretive letter in the US clarifying that national banks and OCC chartered banks can act as custodians for the cash reserve that backs the stable coins that underpins a fiat currency at the back of it on a one-to-one basis. So this shows the progressive thinking among some of the US regulators now to look at how do we enable traditional financial institution to be a market player in this area. So increasingly the realm of the regulators are no longer just looking at traditional assets. They're also looking at how do we enable financial institutions to be part of the ecosystem. And then you have digital tokens as well, tokens that are used for a particular purpose, for example, utility tokens, and you do have security tokens as we speak about. And the other thing that is not a topic for today, but increasingly we see is the future of programmable money. So programmable money in this instance is not about how is it different, is where you program the money for the use for a certain purpose, whether for charitable use, for the sustainably finance, with the money using a smart contract and with an embedded smart contract, the recipient of it could unlock it for investment, but it has to meet certain criteria. So one, it allows for a purpose-driven objective. So I would say this is obviously the slides that I provide here is not an exhaustive slides, but certainly these are the sort of the key and main trends that we see of what the future will hold when we look at payments. And obviously I haven't really touched on the traditional payments as well, because you have SWIFT that is obviously reinventing itself to allow for interbank payments. And you do have a lot of other modes of existing payment rails that exist. But what I wanted to show on this slide is what, in addition to existing infrastructure, that we could potentially see in the near future or horizon. So basically I've touched on the highlights on the future of payments, but I also want to cover a lot today on central bank digital currencies, because it has received a lot of press. It has received a lot of focus, and I think it's important for audience to know the difference between a CBDC as compared to a stable coin or virtual currencies like Bitcoin, Ether, or digital token in the context of a utility token, security token, and exchange token, and programmable money. So without further ado, I wanted to cover the next slide on CBDC. As I explained earlier, CBDC is a new form of money issued digitally by the central bank, and it's intended as a legal tender. The difference between CBDCs and with respect to the other digital tokens is that it does have the backing, and it is recognized in the national jurisdiction as a legal tender similar to cash that you hold. So why do regulators need to experiment it? A number of reasons. As I explained, especially with COVID now, there's a huge reduction or decline in the use of physical cash and banknotes. It is also to counteract the growing role of cryptocurrencies. Central banks are concerned that with increased use of privately issued cryptocurrencies or tokens or stable coins, what they need to make sure that they cement the role of a central bank digital currency in a digital form. And there are countries with weak institutions that feel that they may find benefits in asset-backed CBDCs, and also to expand the accessibility of a country's requirement. As we note, China is also issuing its own, or thinking of issuing its own central bank digital currencies. US, given its position as the global reserve currency, US dollars, over the world, certainly have piqued the interest of the central bank in the US to look at how do we secure US position as the global currency of choice. And certainly going digital, allowing people to hold US dollars in a digital form, it is a key project that the Fed is focusing on right now. So if we move on to the next slide, we also look at not just the benefits, but also the risks. So what are the risks? The risk is that depending on the design of CBDC, it could disintermediate banks. If parties or consumers could directly hold central bank digital currency directly with the central banks, then the role of bank could be sort of reduced or disrupted, in the sense that they will have to compete for the same deposits that people have. And these are obviously key design considerations that are being considered. So when we talk about CBDCs, on my right-hand column, there are actually three different buckets here. When we talk about wholesale CBDCs, these are largely used for interbank payments and security transactions among interbank players, as opposed to a retail or general CBDC, which are by its name intended for retail use. And then you have what we call a hybrid CBDCs that incorporate both a wholesale CBDC and retail CBDC features as well. So touching on to the next slide that we want to talk on is the earlier benefits that I talked about. I'll run very quickly so that we can cover other stuff. We talk about efficiency, we talk about demand for money, we talk about greater financial inclusion, and also reduce counterparty risk. So when you hold central bank digital currencies, you're not subject to any counterparty risk in that sense, because that money is especially if it's held directly with central bank, it's with the central bank. You're not holding it on behalf of putting in the bank and then having run a counterparty risk vis-a-vis the bank institution that you hold. So moving on to the next slide on risks very quickly. As I mentioned, we talk about if you use technology, there are risks relating to AML, CDD, and counter-terrorism financing risks as well. We look at legal and regulatory framework needs to be put in place before CBDC could be issued. And I also want to touch on some of the use cases and design cases. And one of the things that I like to show is it's a pyramid that looks at how do we design, and key policymakers are looking at how to consider the design and purpose of CBDC. This is what we call a CBDC pyramid. It was recently issued in a report by the Bank of International Settlement. The pyramid on the left looks at consumer needs, and on the right, it looks at CBDC design. So it's just the way to read it is that if the design that's intended is for cash or cash light, then the key consideration on the right is what architecture you need to build to allow for wider access. If you want a resilient system, they need to consider, will the system rely on the existing payment rails, or will it rely on distributed ledger technology? And also looking at access. If you have a central bank digital currency, is the intended purpose is to allow for what we call universal access, i.e. access to anyone who needs it? Or would you only allow for people who are able to hold mobile devices? So these are obviously key consideration. But last but not least, at the top of the apex in this chart is the CBDC intended for domestic use, or is it intended for cross-border payments? If it's intended for cross-border payments, what is it trying to solve for? Is it trying to solve for the wholesale payment high-valued issue right now? As we know, we can't really make high-value payment cross-border on a weekend because the banking system is shut. Or are we allowing for that in addition to a retail CBDCs? So this provides a sort of a framework, a very high level, of course, for central banks to think about in terms of what they want to do in a number of projects they're currently running. So I wanted to show you a couple of high-level key status on what CBDCs are. So if you look at the next slide, we talk about CBDCs, and if you look at the progress, there is, in the chart on the left-hand column, in 2017, there were around 65 projects around the world trialing or studying or researching central bank digital currency. You fast forward to 2019, there is more than 80 of such projects around the world, and the list is only growing. So focus of the work, as I mentioned, you have 3 different buckets: wholesale, general purpose, and hybrid. And then most of them are in the stage of doing a proof of concepts. Some, in some jurisdictions, are a bit more advanced, that are at least in the advanced stage of pre-trial or pre-issuance development. So there's a few jurisdictions are a bit more advanced than the rest, but most of the pack, in terms of central banks project, are still at the experimental level, at proof of concept level. So moving on to the next slide, we will look at a couple of key projects I want to flesh out. So the key ones, looking at regions in Europe, is what we call the digital euro. So the digital euro is a project run by, obviously, the ECB, the European Central Bank, and the European Commission, together with member states. They are really pushing for a digital euro. Fast forward from last year. Last year, the tone was, we're not sure whether we want to issue digital euro. We'll wait and see. But the published report of the digital euro that was published just a few days ago, the tone have changed. They are now saying it's not a question of when, if they will issue digital euro, it's a question of when. So the European authorities are really playing catch up. In fact, they are now seriously consulting. They're in the stage of consulting. There's a public consultation going on right now, where they're inviting members of the public for thoughts, ideas on how to construct a digital euro. So they're looking at a couple of things. One, should the digital euro be used for retail purposes? And what sort of design should it come? Should it also embed privacy concerns? So it shows a very progressive thinking from the central bank in Europe right now as we speak. So the other 2-3 topics I want to talk about is digital dollar project. So the digital dollar project is important is because the Fed, together with the Digital Dollar Foundation, are working very closely together with, obviously, private sector as well, to look at what are the use cases that you want to trial in the US, to look at the hypothesis, the value, and the functionality of a future CBDC using US dollars. So the project Digital Dollar, just a few days ago, have released a further report setting out 9 use cases in the States, focusing on the unbankable consumers. That's looking at the consumer element. The next stage, they're looking at focus on market infrastructure. So in terms of interbank payments, how do we enable it? And also the other part they're looking at is also focused on the technology. What sort of design they want to do? Does it mean that you want to put in a digital wallet? Do you need to embed it in a distributed ledger technology? And what kind of key considerations that you need to look at in terms of functionality, privacy concerns, legal and regulatory framework that needs to come into play? But that shows how far the digital project has come along. Last year, it was just aspirational, saying that we want to be there. However, the Fed have maintained the line that we're studying, but we have no plans to do it. And the tone we're seeing from the Federal Reserve remarks and a number of speeches have changed from, yeah, possibly we're just going to observe what people are doing, to now saying, look, we want to basically be part of the pack, looking at it such that, one, we can secure US dollar position as the world reserve currencies. Two, we want to make sure that in the race towards adoption of technology, we don't lose out to major competitors or other central banks out there. And that dovetails with the project I want to talk about, which is China's PBOC's, central bank PBOC's project on digital yen. So digital yen, as far as the public information are concerned, that they are now in an advanced stage of trial. They have released digital yen to be used in 4 major cities in China. And they have actually trialed the payment in a number of scenarios for financial services, for payments of government payrolls, for use of transportation, logistics. And they've also invited Starbucks and McDonald's in China to use it for payment of services and goods. So we have seen their sort of trial app that is being currently being downloaded on a trial basis by a number of participants in their POC. And it's very much similar to what we see in the WeChat attention payment and some of the features. But the difference is that this is not a linkage towards a credit card. This is actually cash held in a digital wallet, in a digital form. So obviously, as we speak, these are still proof of concepts. There is no immediate plans or timing yet in terms of when we will see a central bank digital currency being issued. Now, the closest to home, close to the US shores, are the Bank of Bahamas. So strangely, the Bank of Bahamas, which is very advanced, which is good, they are actually on the 28th of October, this month, will be launching the first phase of a central bank digital currency to consumers based on a phase approach. So they're starting with phase 1, a much limited use, all the way to phase 2, phase 3, phase 4 on a very staggered approach. So the central bank of the Bahamas is actually leading the pack in terms of the usage. But obviously, it remains to be seen whether they are adopting a DLT or they are relying on existing payment rails with mobile wallets to be used. So moving on to the next slide quickly. I want to touch on international positions on CBDCs. So there's a lot of collaboration among central banks right now, looking at CBDCs, as I talk about, economic functionality, technical design, cross-border interoperability, and sharing the know-how emerging technologies. Because to a lot of central bankers, the concept of distributed ledger technology is new to them. Right? Up until now, a lot of them equate DLT and blockchain to things like just Bitcoin or virtual currencies, but a lot of them are well advanced in their understanding now, in understanding, the backbone of technology that's being developed around it. For example, how the travel rule works, and then in terms of privacy features under GDPR, can we use encryptions, zero knowledge proof concepts? These are starting to sort of seep in terms of some of the thinking. So if I want to show you the next slide, I wanted to show you key central banks' efforts. You have on your left, US Federal Reserve, European Central Bank, and FINMA in the major financial regulator in Switzerland. There's very forward thinking. As we know, FINMA has has approved a few crypto banks, i.e. financial institution licensed to work on to allow for the use of crypto storage, to allow the use of crypto bank. So the world's first 2 crypto banks that are regulated by a banking charter actually issued in Switzerland. Hi.
Hi. So we are actually short on time right now. Do you
Sure.
have any closing statements or anything?
Yeah, I think in closing statement, what I would say is this: the concept of CBDCs and the rest will sit alongside the privately placed issuance of digital payments and digital currencies. And I would urge every one of you who have a very keen interest to this to follow this, because what the regulators want to do is to enable this ecosystem to coexist, but on a same level playing field, same activity, same regulations, so that all the consumers and marketplace are treated on an equal footing. And thanks everyone for listening in and for your participation.
Yeah, thank you so much, John. This was a really interesting presentation and one of my favorites for this conference so far. So we're going to transition to our next talk. Thanks again. Really appreciate it.
Will do. Thank you, Zain.